Richard, thanks so much for joining us. We've been all wondering this, whether or not geopolitics, whether or not the situation, the impact on oil and gas and inflation, will that all factor in to the Fed's thinking? What do you think?
Probably very little. Obviously, what's happening in Ukraine is going to add to some supply and inflationary forces. I mean, they produce 2.3 billion tons of manganese. They're the third largest oil reserves in Europe with 30 billion tons. Mercury ore, shale gas reserves, 22 trillion cubic meters. It's got the third largest arable land, black soil land in the world. Lots of wheat, lots of commodities, et cetera, et cetera. So short term, I would assume, by the way, that Putin wants to exploit all that. But short term, we're going to get price pops. We're seeing it in terms of markets for commodities. But the Fed can't do anything about that. What the Fed can do is begin to reverse course. They've made it clear they're going to do it. I think what it does, Melissa, though, is they'll be gentle. And we're going to have probably most likely the odds are 85 to 90%, a 25 basis point move in March. I don't think that'll be deterred. And whatever President of the Federal Reserve Bank of St. Louis is talking about, I don't think will occur. But it's the beginning of a process. They need to go in this direction. They've been hyper accommodative. I don't think this changes.
Mr. Fisher, it's Karen. Thanks for being on. So we have, inflation numbers 7 handle, 8 maybe. I know the Fed has talked about having some room over 2%. Where do you realistically think they could try to get down to in, let's say, a year and a half?
I don't know. If you look, you guys are better than I am at looking at earnings reports, but over 70% of the ones I've seen, almost 80%. Our CEOs and CFOs talking about the fact they're going to phase in their pricing to protect their margins, almost across the board, whether it's services or particularly goods. You don't just move overnight, as you know. You guys are great security analysts. You don't just change the ecosystem of a company in one fell swoop. You have to worry about how you protect your margins, everything from how you pace your payables, you lag them, accelerate your receipt, all the way up through CapEx, inventory management, everything that goes in between. So everyone I'm listening to, and I'm sure that you are listening to, are saying pretty much the same thing. They're going to go as far as they can go. They don't want to turn off their customers. They want to protect their margins, however. Cost of labor has gotten very rich, all in. So I don't think this fades at the end of the year. I think it continues on through 2023, at least for the first half. And then maybe we can get inflation down to the 3.5% range, still pretty rich.
At what point, Richard, do you think, or at any point, does the Fed actually factor this in? If we see sustained inflation, they go ahead with the rate hike, let's say 25 basis points for argument's sake, slow and steady, but inflation remains stubbornly high and is given that extra boost because of what is going on in Ukraine. At what point does the Fed say, maybe we need to re-examine things?
Well, I think they're just beginning this process. I don't think they know, to be honest with you. What they do know is they need to shift gears. That's the signal. The question is the speed with which they do it. They're going to stop expanding the balance sheet. They're going to try to figure out whether or not they should be reducing the balance sheet. You only have, over almost $1.5 trillion of short-term treasuries, that is 1 year or less, maturing as of last Thursday, within 1 year. You'd have to go out longer. The Fed doesn't sell anything. You've got almost all your mortgage-backed securities 10 years or longer. They're going to have to discuss that. And all these things have to be done at once. That is, it has to project to the market what they've talked about, reflect it in the minutes. The signals will come out, but I don't think they're quite ready to come out yet. And we'll get more during the March meeting. But it's not just Fed funds. It's also the balance sheet. And what are they going to do with it? How can they do it? At what speed? There's a lot of uncertainty here, and I think that uncertainty is roiling the markets just as Ukraine is roiling the markets. The high volatility, look at what we saw today. Absolutely astonishing. I think that will continue for a while.
Last quick question, Richard, and my producer's going to be screaming in my ear for this, but do you think, is the Fed put dead? Did you ever think it really existed? Has it been dead for a while?
I got in trouble in the committee when I told Ben Bernanke we were just adding a put with QE and making it clear we'd stay in there forever, which we pretty much did until, we tried 2013, we had the taper tantrum. So it was pretty clear it was on. I think there is one if it begins to roil the economy. But I would put it this way, and this is probably my cheap way out. The strike price is different now, and it's not quite where it was before.
Yeah, I think that's what most people think. Richard, great to get your thoughts always, as always. Richard Fisher, former Dallas Fed president. Guy, what do you think?
I love Richard Fisher, and you know think about him. That's him being parsing his words. So if you then read between the lines, what he'll tell you is we've made ourselves a slave to the market. We should never have been. And that Fed put that you think is there, it's not. And he's right. And again, I love his candor in this, and I don't think the Fed put exists. I've said it 100 times. David Tepper correctly has said for years, don't fight the Fed. And he said that when they were adding liquidity and being accommodative to the system. And if you were bearish, you were fighting the Fed. Well, now, effectively, when they've changed course, if you're long-term bullish, or at least short-term, you are effectively fighting that same Federal Reserve.
Yeah, agree. And Richard Fisher calls it as he sees it, and I believe he did. And I think one of the great things about this country is we truly do have a central bank that's independent, and this is not the case for other countries in the world. So I applaud the Fed for hanging in there. I do think there was a long line of central banks around the world that have been much more aggressive against inflation than we have. And it's amazing to me how quickly we flipped on a dime. And it almost seems like it did coincide with Powell's reappointment. I mean, this is a Fed that said transitory, transitory, transitory. Then one day you had everybody in the Fed lining up telling you not only do we have inflation, but we're concerned. And here we are.
Yeah. Pete?
I would agree with what Tim just said, as a matter of fact, because that's exactly right. And the one thing I would say is that Powell has been very clear. He's been very transparent. He's been right up in front, and he really hasn't stepped down from that. So if you're willing to listen to the Fed and don't want to fight the Fed, you have a pretty good idea of exactly what their plans are for the future. But, I still think everybody wants to just try to figure things out and try to get in between everything. That's really not the right way to do it. I think Powell's been very, very clear.